Dow Jones Industrial Average higher by 0.8%. The S&P 500 flat just barely to the upside, but the NASDAQ, that is lower right now. Some pressure from NVIDIA after those earnings report. And then additionally, taking a look at the decline here, it's down by about 0.4%. That is following those fourth quarter results from NVIDIA. Joining me now, we've got Robert Pavlik, who is the Dakota Wealth Management Senior Portfolio Manager. You're looking at a variety of factors here, Robert, that are driving the recent volatility we've seen. What are they?
So, I mean, you have inflation. Inflation doesn't seem to be ebbing at all. You have concerns about growth of the overall economy. Retail sales report, the Walmart report, that's concerning people. Tariffs are concerning people. Trump is talking about raising tariffs not only on, China, but Mexico and Canada. He's talking about reciprocal tariffs. I think all those things came together, especially with a market that was trading around, 23 times. And, you had a lot of run up in some of these big momentum, highly traded trader type stocks like Applovin and Palantir. And I think that all sort of came together at one point, and people started to, move to the exit, and, selling begets more selling. Is it a problem for the overall economy? I mean, growth is certainly, small. It's being reduced. I mean, we're looking at GDP of 2.3%, something like that. I had been saying, even since I've been on since January, that I thought GDP growth was going to be 2 and 2.5%. It's not the worst. I mean, it was kind of like what we experienced during the Obama administration. We were growing and the market did okay, but you're not just seeing it go gangbusters. You have to sort of really pick your spots in this market. And
so with that in mind, and it sounds like a lot of the economic inputs that you were mentioning can also contribute to what we heard one of our guests from Stifel earlier say, prepare for a wobbly stock market as a result of that. What would you use to describe what type of fluctuations we're expecting to see over the course of this year?
So what worked all sort of last year, is probably won't work all this year. You're not going to have all these big Mag 7 type of rallies that are going to carry the overall market.
It's already the long trade right now.
You have to actually do your work and find companies that are good quality names depending on your risk tolerance. If you have a high degree of risk, then maybe, an Applovin, a Palantir, a Snowflake matches into your portfolio. But if you're like the rest of us, I mean, who, are somewhere between, 5 and 7 on a risk tolerance of 1 to 10, you're probably looking at, names that I've suggested in the past, like Costco, like Google or Alphabet, or like TJX or AJ Gallagher.
Yeah.
I mean, these are good, solid names that are doing really well. And nobody talks about them in the market. Nobody ever talks about AJ Gallagher except when they report. Nobody ever talks about TJ Maxx except when they report. So these are the types of names that I look to put into my portfolio right now.
And so how does that factor into the barbell approach that we're increasingly hearing strategists talk about right now?
So I think you can have some exposure to technology. You don't have to have, these crazy high beta names in your portfolio, but you could put Apple in there. I think Apple is a solid company. It's not growing tremendous amounts. It's not the cheapest stock in the overall universe, but it's a good quality name that I don't think you have to really worry about losing sleep over. You could even sort of expand your horizon and maybe add a little bit of risk to it with like an ANET or even a Broadcom.
Yeah.
But just know what you own. Then I think you have to look towards, what else do I put into the portfolio? A lot of activity has flowed into the healthcare space. Now, look at things like Merck recently. Merck, has been a terrible stock, terrible performer. And all of a sudden, over the last week or two, the stock has spiked up. Everybody's got to own Merck. For what reason? I wonder, and I shake my head at some of those trades. But I think if you look towards, some other names in the healthcare space or even in the consumer discretionary space, you don't have to take on a whole bunch of risk.
How do you identify an exhausted trade? You mentioned Applovin and brought that to mind here. That was a name that's been up, 400% over the past year here, and ultimately it's pulled back quite a bit from some of those highs that we've seen as well. And a lot of people trying to figure out, okay, with that pullback, is the trade fully exhausted at this juncture because of the beta that you were talking about? And how do you kind of use that as your analysis on a wide range of stocks?
So I think the best way to answer that question is to look at the technicals. Has the stock spiked up well above its 200-day moving average? Is it sort of out of its trading range? Is it does it have an RSI that's completely off the charts? Now, if you're taking a look at those types of stocks, which we saw like 2-3 weeks ago, and you're thinking, well, I can't add this to the portfolio. We're constantly reviewing the names in our holdings, and we're constantly looking for new names or possible better names for the portfolio. So there really wasn't much there to be interested in. But I think if you come back to, again, like a TJX or AJ Gallagher might even be a little bit extended. I wait for a little bit of a pullback, but TJX looks pretty decent too.
Just reported earnings.
Yeah, exactly. And Gallagher just reported like a couple of weeks ago. So again, quality names, nobody talks about them. It's not within these traders, universe that are going to run them all up and then, bail at the slightest bit of concern.
Yeah. Robert, great to have you back.
Thanks for having me. I
Good to
appreciate it.
speak with you.